it floods me like I'm just granite. I feel all messed up, but my feet are planted. Give me a planet, I will just go there. The earth is abandoned, I see the layers. Telling the time when I gaze into the canyon.
Welcome to Looking at the Markets with David Modell. If you're considering buying bonds, I want to give you a warning right now. If you think that bonds are risk-free, you're wrong. 10-year Treasury yields peaked at nearly 16% in 1981. Bond yields steadily declined from 1981 until they bottomed out at barely over 1% in 2016. Bond prices move inversely or opposite to bond yields. So this was the bond bull market. I've got some news for you, though. The bond bull market is now over. Treasury yield normalization is in progress. 3 rate hikes are expected in 2018, according to the most recent projections. So there's no doubt that bond yields will continue to rise, just as they have risen since 2016. This means that if you buy bonds now, or if you already own bonds, their value will decrease over time. Furthermore, bond yields need to keep up with inflation. If inflation increases, bond yields will also increase, which will erode the value of your bonds even more. At slightly above 2%, the current U.S. inflation rate is below average compared to the inflation rate of the past 40 years. Besides, with the Fed continuing to print money at an alarming rate, is there any doubt that inflation will have a devastating effect on the value of investors, savers, and retirees' bonds? And to make matters even worse, an increase in inflation will decrease the purchasing power of whatever's left in your savings. Yes, I'm painting a bleak picture here, but I wanted to give you a warning about bonds. And I wanted to show you a couple of charts. These charts are from macrotrends.net. This is a chart showing the historical inflation rate, and as we can see on the right of the chart, the current rate of inflation is historically low compared to where it has been. We can see it going lower and lower over time. So right now, inflation is low. And with the Fed printing money, do we really believe that inflation is going to remain this low for much longer? I don't. And if inflation goes up, again, it's devastating if you already own bonds. Let's take a look at another chart from macrotrends.net. This is the historical rates of bond treasury yields. All right. So bond yields over time since the 1960s. And here's the bond bull market. I know it looks like a bear market, but remember, when treasury or bond yields go down, the value of bonds that are already owned goes up. So this was the bull market. We can see treasury yields peaking at almost 16% back in 1981. And then we see lower highs and lower lows all the way down until 2016, right here, with the low here barely above 1%. And now it's starting to go back up. No more lower highs and lower lows. We can see it started to go down and then sideways, and now it's curling back up because it's not just going to go down forever. All right. And the bull market was not meant to last forever. Bull markets don't last forever. And so it's starting to come back up. This is normalization. And again, if you own bonds during the normalization process, it's devastating for investors, savers, retirees. It's terrible. It's terrible what they're doing. The promise of the government, which is what a bond is, the promise is being broken. The promise of a risk-free investing, retiring, saving, that risk is there. It's not risk-free, and it's a broken promise. So you've got to find other ways to invest, other ways to find yield for your portfolio, for the sake of your retirement, for the sake of your investing. You deserve better. So I hope I gave you a good warning. I hope you'll hear this warning. My name is David Modell. If you want to learn about better ways to invest, better places to think about putting your money, you can contact me at any time. My name is David Modell. My email address is davidmodell@gmail.com. Also, in the description of this video, I'm going to put some links to some free reports. You can check those out and perhaps find better ways to get yield than U.S. Treasuries. Thanks a lot. I appreciate it. And I'll talk to you again very soon.
I didn't plan it, I cannot stand it. The brightness, it floods me, I am just granite. I feel all messed up, but my feet are planted. Give me a planet, I will just go there. That earth is abandoned, I see the layers. Telling the time when I gaze into the canyon.